Good afternoon. Thank you so much for joining us today. This is our third webinar now with Dr. Apollo Lupescu from Dimensional, and we're so excited to have you join us today. Our topic, I think, is going to be interesting. It's a topic that we've gotten a lot of questions about at Warburton Capital. I'll briefly introduce myself. I'm Jonathan Hall, the president and CEO of Warburton Capital. And we get to help clients think through a lot of questions about investments and their own financial planning. And one of the topics that's been coming up more and more is cryptocurrency. So the title of our talk today is Crypto, Tulip Bulb, or Light Bulb. And we'll walk through what that means in just a second. First, a few quick housekeeping items. This webinar will be the most beneficial for all of us if you ask questions, especially on this topic. I know that in the audience today, we're going to have people from a variety of different standpoints regarding cryptocurrency, folks who may be experienced investors in cryptocurrency for a long time, or maybe folks who don't even totally understand what that means, what cryptocurrency is. You may be familiar with stocks and bonds, but what is crypto? So today, we're going to try to add value to all of you. And if you have a question that pops up in your head, feel free to put it in our Q&A box. You'll see it around the 50-yard line on your screen. Put it in there, and I'll see it. And Apollo has given me full reign to interrupt and ask your question. So feel free to do that. That's going to make our conversation more rich today. So with that, I'll go ahead and introduce our guest today, Dr. Apollo Lupescu. He is a vice president at Dimensional Fund Advisors, and Dimensional is one of the premier investment management firms in the world, managing around $800 billion in assets. He's a globally recognized speaker who we're grateful to have had speak to our clients several times now, and he's given hundreds of lectures on financial topics and investment topics over the years. He's considered the secretary of explaining stuff at Dimensional. He's one of the industry's best explainers. He's got a knack for helping folks work through complex issues in a clear and understandable way. So, a little about his background. He's been with DFA in Santa Monica for over 21 years. He taught at the University of California before that. He has a PhD in economics and finance from UC Santa Barbara, has a BA in economics from Michigan State. And while he was there, he competed and coached water polo. And even to this day, he's still playing water polo, is what I've heard, and learning
Yep.
to surf. Is that
Yeah.
is that the case?
That is the case. I mean,
All
it's
right.
it's hard to learn after 50, but
Hey, you got to start somewhere.
you got to start
And
somewhere.
yeah, we don't have a lot of opportunities to surf in Oklahoma, but next time you're out here, we can chat about it.
Well, I did swim in the pool at the club where we had the event last year, so
Yeah, yeah,
counts for something.
we've got water,
Yeah.
absolutely. So I'll start with this, Apollo. Our title today is Crypto, Tulip Bulb or Light Bulb. Uh,
Right.
kind of walk us through what that means and what we're referencing with that title.
Yeah, no, first of all, it's great to see you. Thank you so much for the invitation to be back, and thanks to everyone for attending. And that is an interesting reference because I'm not here to tell you it's good or bad, you should do it or not do it. I just want to provide some clarity. And I think the title, the way Jonathan positioned it, I think it's really well taken because the title was, is it a light bulb or a tulip bulb? And what's the difference between the two? Obviously, there's a big difference. But what's the idea? Why even start with that? Well, it turns out that we all know the fundamental difference in everybody's life and society as a whole that the light bulb provided. We went from walking in the dark and all of a sudden there's light and there's electricity. So we know, how important was the light bulb as a moment in human history. And then the second reference is a different type of bulb, which is a tulip bulb. And the reason that the reference was made is because in the 1600s in the Netherlands, there was a moment in time when people in that country, at that particular moment in time, felt that tulips are really, really important. And they became really valuable. And there, at that moment in time, if you wanted to go and buy a tulip bulb to make these beautiful tulips in the Netherlands, it turns out that they got to be very, very expensive. And in fact, became a craze where people were kind of fighting over these and they were bidding them up to the point where you can either buy a house or you can buy the tulip that would create a bulb that would create a tulip like this. So what's so interesting is that you know, it made sense to people. Everybody kept buying them and buying them because in their minds, like, why would I not buy this? Because it's going to continue going up in value. And for a while, they just keep going up and up and up and up and up in value. Up until one day, people woke up and they said, "What am I doing with this bulb? You know, what's the big benefit of it?" And they just realized that that collective delusion they had in society for a while just burst, and all of a sudden they're making soup out of those tulip bulbs, and they're worth nothing. So the question here is, at this point, this idea of crypto and Bitcoin, is it a life-changing moment in society, or is it a bit of a craze like we've experienced before in human history? And probably the closest that I can come up with is this idea of a tulip bulb. And that's the question that we're not gonna give you an answer at the end, but you're gonna, you know, hopefully at some point draw your own conclusions and feel whether you're closer to the light bulb moment or the tulip bulb moment. But that's gonna be up on you, not for us to tell you. But that's why we had this reference. Is this a life-changing moment in the way we think about money and finance, or is this something that maybe we're going to look down the road and figure out, well, there was a moment when we had that was a bit of a craze, or could it be somewhere in between? And we'll come back to that as well.
Excellent. So, like you mentioned, Bitcoin and cryptocurrencies in general have garnered a lot of attention. And many of our clients in conversations with them, I've been asked to think through, does this make sense in my portfolio? What is the investment potential of cryptocurrency and Bitcoin? That's something we've been helping clients think through. So for today, I'd like to start with a really foundational question. What
Right.
exactly is Bitcoin? Where did it come from? How does it work? Can you give us a
Yep.
primer on Bitcoin and crypto in general?
Absolutely. And I think it's so important because I think a comedian once said is crypto is Bitcoin is everything you don't understand about computers with everything you don't understand about money. What can go wrong? So kind of getting some clarity and the starting point, I think it's really important. So to kind of make this a little clearer, we need to go back to the days of the financial crisis, about in 2009 or so. And if you remember in 2009, there was a lot of skepticism around the financial institutions of the country, and people felt like we can't really trust these institutions as much as we thought we were, and that there was a bit of lack of trust and skepticism, and in general, people are looking at the financial system and saying, is it as robust as it could be? And then remember, those are really terrifying days. So back in those days, if you want to think about it, what we did is we lived. And by the way, if you roll your mouse on the Zoom window on the upper right hand side, there's a button that says View, and if you click on Speaker View as well as full screen, this will probably be easier to see. But back in 2009, what we had is that we all lived in something that I think of as the mainland, the real world, where we use dollars. And the way we kind of parked our dollars is at the bank. And we entrust that the bank will have a ledger, and the banks have a centralized ledger where they keep track of who owns what into those accounts. And that's the world that we lived into. But we need to trust the banks that they will take care of the ledgers and the banks will be around. And that was the issue back in 2009. So I want to go there because I want to set the stage. How did we feel back in 2009? It wasn't a very a positive, cozy, warm feeling towards the financial industry and the banking and the financial system in general. So in those days, in 2009, on Halloween night, somebody, anonymous group of people or a single individual, nobody knows who, by the name of Satoshi Nakamoto, they published a white paper. It was 8 pages long, very easy to understand. Everybody here can read and understand. And what they did is they suggested some very, very interesting ideas, really interesting ideas. And they said, okay, this is the mainland where we all work in dollars. But what if we create the island of Bitcoin that is completely separate from the mainland? It has nothing to do with the mainland of dollars. It's its own island. And on that island of Bitcoin, we're going to have some innovations that are quite clever. So what did they say? Well, the first thing they said is that instead of having a centralized ledger that one entity controls and we need to trust that entity, what if we have what's called a decentralized ledger that sits on many, 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 many computers around the world, that is perfectly transparent, open, and visible to everyone to see in terms of who owns what and what were the transactions that happen. And that the centralized system will be built that it cannot be forged, and you don't need to trust anybody because the system itself is built so robustly that you can rely on that ledger. And that's a very interesting idea. What if instead of having a centralized ledger, it's a transparent ledger that is visible to everyone, and it's backed up by on so many thousands of computers around the world? And because it's transparent and open, well, what if we make this anonymous? That when you open this little wallet there on this system, nobody's going to require you to put a social security or an address or nothing. You just go and open it. It's completely private. Nobody knows who you are, and that gives also a level of anonymity to the owners of these accounts. And this system is called blockchain. So the first thing you need to know, folks, is that this idea of blockchain is one feature that is associated with Bitcoin. But that's just one feature that is really interesting. And also, at this point, once you have these little wallets that sits all over the internet, all over the world, and there's transparent, this ledger is visible to everybody. Well, what sits in this ledger? Because it's not dollars. It cannot be dollars because it's an island on its own. So what this group did is they said, we need a token. We need some token that can be moved around these wallets, and we'll call that token Bitcoin. And that's what Bitcoin is the token that goes between these wallets, and it lives on this island. But what's interesting about doing it so, it created another benefit to the system, which is that if you want to send money to somebody else, well, it goes exactly from your wallet to somebody else's wallet. And that's really good because right now, if I want to send money to my kid in college and he asks a lot for money, it has to go from my app to my bank to his app. And there's so many hands touching the money, and money's like soap. The more you touch it, the less you have it. So there are too many entities kind of touching money, and that makes it inefficient. But in this world, boy, we don't have to worry about it because the money goes directly from my wallet to his wallet, and it's all good. So there are a lot of very interesting features that Bitcoin introduced, but it's good to know the fundamental premise. It's an island. It's separate from the mainland of dollars. It doesn't interact at all with that. And number two, it has the benefit of having a decentralized ledger that's called blockchain. And Bitcoin is simply the token that moves this. So Bitcoin is a combination of two things: the blockchain system and the token itself. And that's very clever. I think they're very, very clever ideas that got put into this. So the question is, okay, well, we have this system that's really clever, and it's designed in a way to allow people to move money around and move assets around. And if you fast forward now, we're 15 years plus into this experiment, has this happened? Has Bitcoin become sort of the place where we all now send money and transact? And the answer is absolutely not. It is not. It is not, particularly in the Western economies, it is not. Because I'm not sure about you, Jonathan, or anybody on the call, but I know very few people who ever bought anything using Bitcoin. And the folks that did are kids in college who might get a fake ID, and the only way you pay for it is Bitcoin. So unless you're like a drug dealer or you try to get money out of Russia or China, or whatever, it's not something that's commonly used to make payments. And in fact, it is quite possible that it might never become a form of payment or an actual currency the way we think about it. And the reason for that is that if you look at Bitcoin, that the blockchain system, well, that blockchain system has to validate a transaction. And that's done through a system called mining. And mining basically means that somebody is going to spend the computing time and the electricity to solve a puzzle that validates that the one person had the money and now it's going to move into another account. But that takes time. And if you want to know, folks, today, I mean, pretty much like the way the system was designed, Bitcoin can do roughly about 7 transactions per second. So that's the limit. That's kind of the maximum that's kind of put out there when you look at Bitcoin, 7 transactions per second. So in other words, in the entire world, only 7 transactions per second can be validated. And to make a comparison, if you look at Visa, which is the form that a lot of us use as electronic money instead of Bitcoin, well, it turns out that their maximum capacity from what's published out there, it is about 24,000 transactions per second. That makes it scalable. So it turns out that I can't tell you that Bitcoin is or will become a form of payment, but it's hard to imagine at this rate it's going to work out very well because look, if you're if you go buy a coffee and you pay with this, well, you can't wait 20 minutes for the transaction to be validated. It's just not going to work. So because of that, there are some limitations in terms of what Bitcoin can be as a currency, which was the initial thought that went into its creation. Again, it's really important to know that it's completely disconnected from the mainland of dollars. It has nothing to do with the mainland. If you want to use Bitcoin, you have to live on the island of Bitcoin to use that blockchain system. The blockchain system has nothing to do with any of the banks and nothing on the mainland of dollars. So let me stop here, see if this is helpful in clarifying or hopefully not confusing many folks.
No, that's a helpful explanation, Apollo. And again, I'd encourage our viewers, if you do have questions, if this explanation or anything so far has caused a question, feel free to pop that in the question box, and we'll make sure that we ask it. I do want to ask a follow-up though, Apollo.
Yep.
So, Bitcoin as a currency, one of the things that might make that difficult, and you're buying the coffee example, that transaction, would be the 24/7 volatility and movement in Bitcoin. Because
Yep.
in case the folks online aren't aware, you can trade cryptocurrency 24/7. You can open up your
Yep.
Coinbase account on Christmas and make trades if you'd like, whereas most markets around the world are closed for holidays and weekends and evenings. So my follow-up question is, okay, assuming that maybe stable value is not the goal necessarily of Bitcoin, or at least not where it's at today. And I know there are stable coins that are used some, but we'll leave those aside for a second. One of the things that's drawn a lot of attention is just how much money has been made in cryptocurrency
Yep.
and just how rapidly Bitcoin has increased in value. I mean, if we all found a time machine this afternoon, we might, on our way backwards in time, go back to 10 years ago and buy a Bitcoin, right? So, how do you think it differs as an investment from other more mainstream asset classes like stocks, bonds, real estate?
That's a great question. So to begin with, where does this volatility come from? And if it's disconnected from the mainland of dollars, well, how exactly then we make or lose money based on this? So here's something that's really crucial for everybody to understand now. This is an island of Bitcoin. You have the mainland of dollars. They're completely separate. And it turns out that somebody realized that the only way that you can link the two is if you can build a ferry. And a ferry is basically what's called an exchange. And what an exchange does, and Coinbase is one of them, there are plenty of others, Binance, there are others, we'll talk about them in a second, but these are basically ships that ferry between the mainland of dollars and the island of Bitcoins. And what people realized is that sometimes you might take $1 and get one Bitcoin, but boy, at some point, the same Bitcoin is going to bring you back $2 or $10 or $100. And they said, well, listen, wait, there is a real possibility here that if I use these ships, that I could actually go and make money. So that transitioned the initial idea that Bitcoin is a currency, is an alternative to use the mainland of dollars and banks. It basically kind of said, no, what if this is an investment? And this is what, Jonathan, you're getting at. Is this an investment? And how do you think about it if it's an investment? Because as you said, the rate at which these ships bring back the dollars versus Bitcoins changes. And sometimes, for the same dollar, you get a lot more Bitcoins. Sometimes you get less. So it really is something that changes every single day, every second, as you pointed out. There is a different rate, but that is because of these ships, these exchanges that ferry money left and right between the two of them. So then the question is, well, then how do you think about these? Is it worth kind of at this point participating in Bitcoin, for example, as an investment, even though it was not its intended created purpose? It was not. But should you do that? And how do you think it is different, for example, than stocks and bonds? So let's look at these investments, compare them, and I'll dig then specifically into Bitcoin.
Can I
So if
interrupt
you,
real quick,
yes,
Apollo, if you don't
absolutely.
mind? We did have a question pop in
Yes.
on that first part of your explanation there. How does Bitcoin's value compare to the value of the dollar or the euro or any mainland currency?
And I'll come back to this. How does the value compare? Well, it doesn't really compare because you cannot compare the value of the dollar to the euro because both with the dollar and the euro, you live on a mainland where you can buy goods and services. You can go buy yourself a coffee, you can buy yourself a table, you can buy yourself a phone, you can get yourself a haircut. Maybe Jonathan, you can get something with those dollars and euros. In the world of Bitcoin, you have to be on that island. So it's not really a currency because unless you're again, you're a drug dealer, arms dealer, whatever illegal activity you want to do to hide it through Bitcoin, that's the only way that it's being used. So, in terms of the exchange rate, when you look at euro versus dollar, probably one of the most famous one is the Big Mac index, where it looks at how much does it cost you to buy a Big Mac in Germany versus the US, and that kind of gives you an idea of the exchange rate between the two. So there are ways that he can do it, and he can find the exchange rate based on interest rates and so forth. But there's none of that with Bitcoin because again, you have to live on that island. And on that island, there are not many stores there. Again, unless you want to buy something that is not really legal. But then, how do you think about this? So to me, whenever you have money to invest, it really starts with a financial plan, and this is what Warburton and the team there kind of does for you. And if you think of a financial plan, there are three things that you can do in terms of deploying your money. This is really important for everybody to understand. The first thing you can do is you can buy ownership. You can own businesses. And that's really a fantastic way. And in terms of the ownership of the business, one of the ways that you can do it is what's called private equity. And if you own your own business, that's the best way to get private equity exposure. Sometimes you can try to buy into it, but they might let you in or not. Like Warburton is a private company, Dimensional is a private company, and you couldn't just walk in there and buy Dimensional ownership, or perhaps Warburton, unless Jonathan kind of the folks who kind of have it say it's okay to do it. Now, The other way to buy ownership is to go to a set of companies that have opened up their ownership to the public at large, and that's what you get in the stock market. These are called publicly traded stocks, publicly traded companies, and at that point, nobody can stop you from buying ownership in Tesla or Exxon or you name it. And that's one thing you can do with your money, own things. The second thing you can do with your money is you can lend it. And you can lend your money either in private credit, and private credit means that it's your cousin Jimmy, or maybe there's some companies who cannot get money from the bank and they'll go to you. Or you can go to what I think it's a more transparent, robust way to lend money, and that is by having contracts with the government and corporations in the form of publicly traded bonds. And those are transparent, they're liquid. It's a great way to get exposure to this form of investing. But there's a third category. And the third category is something that I think of as non-economic activity investments. In other words, these economic activities, these investments don't have an economic activity, but you can invest in them. And one example of that is options. If you want to buy options, plenty of people buy options and they do it for fun. They don't have an economic activity per se, but you can make money in them. For sure you can make money in them, or you can lose money. And then there's a second branch. And the second branch, the word that comes to mind is collectibles. And collectibles is something that you can own and make money. And you have art, you can have wine. And what I'm going to suggest to you is that Bitcoin is included in that particular collectible idea. Because it doesn't really have an economic activity. So it doesn't fit into ownership or lending. And I'm going to suggest to you that the reason that that it fits and will become very clear is in the way that you evaluate these investments. And when you evaluate a Bitcoin, the best way to categorize it is on the collectibles. And why is that? Any investment, not just Bitcoin, can be evaluated in four ways. Number one is this a good deal, and what should I expect in return for buying it now? The second one is what's the risk associated with it? Number three, what's the cost? And number four is how is it helping me achieve my goals, and how much should I buy into it? And I'm going to analyze, I'm going to start with the first one because I think the first one it'll become clear why Bitcoin is in that category of collectibles. If you think about a stock, there's an economic activity that basically says, let's say Apple or Exxon. Exxon's going to sell a certain number of barrels of oil, and what the price of oil and what they expect the demand is going to be. And based on that valuation of the economic activity of oil production, you can get a sense of today's price being high or low, and form an expectation based on valuation. You value what you think the company is going to make. You look at the price today. Is it fair or not? And you buy or not. That's what any economic activity enterprise allows you to do. Create a valuation, because there's at least the expectation that down the road there's that economic activity that will generate profits. In the case of Bitcoin, there's none of that. There is no economic activity, none. It just doesn't create anything, Bitcoin by itself. It's just a token. So then how do you value something that doesn't have an economic value, doesn't create any cash flows down the road from an economic activity? And the only word that came to mind, Jonathan, is sentiment, how people feel about it. And this became apparent to me last year, pretty much exactly a year ago, when one of my buddies called me up and said, listen, why don't you come? I have an extra ticket to the Dodgers game, and they're going to pass out some bubbleheads. And I'm like, I'm not going to, I was on the couch and I was very comfortably kind of sitting at home. I was like, I'm not going to go all the way downtown LA just to kind of get a bobblehead. And he said, oh, they're going to be worth something. And I'm like, okay, whatever, you go. And he did. And he did not miss an opportunity not long after to send me a screenshot of one of these bubbleheads that was passed at the Dodger Stadium selling for $1,500. It was a piece of plastic that was passed out, Shohei Ohtani with the dog in his arms, $1,500. And in my mind, it's like, wow, who is that person who did that? And my buddy said, well, no, no, just you wait. What do you know about picking things? Because if they go to the World Series and the sentiment's going to be different and people are going to like him even more, this might actually go up in value. And it's like, I'm not sure about that. What do I know about picking things? Because not long after, the same exact bobblehead was selling for $20,000. $20,000 for a bobblehead. Just sits on the desk, does nothing. No economic activity, but people went from like free to 1,500 to 20,000 within a matter of weeks. But then he didn't play very well, and things changed, and he got hurt. And the same bobblehead was now selling for about 970, which is less than 1,000, which is still crazy. Today's like 150 or something. But the point being is that the whole valuation of this, Jonathan, was not driven by any economic activity, but sentiment, how people felt about it. And to me, I have, like I think it's fine if you have a certain feeling about where this is going, great. But that's why I associate it more with art, wine, bubbleheads than I do with stocks and bonds. So that's the first thing is that as an investor, I couldn't tell you what you should expect, how much money you should expect to make from this, because I have no clue. I have no clue because it is all in the eye of the beholder. Pretty much like it was a case with the tulip bulbs. But what about risk? And you mentioned the volatility, and the volatility is a risk only in the sense that you lose money. Volatility on the upside is not really a risk. I think that the risk of volatility, again, it's quite insidious, but obviously losing money is one way. But the other risk of the volatility, because what does volatility even mean? The volatility means that if you look over a longer period of time for any investment for anything, there's a sort of an average. So that's just the average. Let's just say that's the average. What the volatility shows you is kind of how far apart from the average are the actual observations. So even though that's the average, to get to that average, you can have an investment that moves a lot, or you can have an investment that moves a little bit with the same average. So volatility just basically tells you, what are the outcomes, how spread out are the outcomes, not just looking at the average. And the more volatility, obviously, the more you can either make a lot of money or lose a lot of money, which is not something that most people like. And the volatility of Bitcoin is, in fact, last time I looked, it's about 8 times higher than the stock market. It's 8 times higher than the stock market. So it moves in value a lot. Again, in my opinion, because it is driven so much by people's feelings and the sentiment around it. So it is a risk, but I think the risk is not just losing money, but there's another risk associated with volatility. Extreme outcomes means that you lose a lot of money, but you make a lot of money as well. And the risk associated with making a lot of money is FOMO, fear of missing out. You see, boy, this made so much money, I need to jump in. So volatility has these two sides to it. It's both the fear of losing money, but I think it also FOMO, the fear of missing out. And both those can lead to pretty unfortunate decisions. But I don't want to dwell on the volatility because I think there are some more significant risks, folks, that you need to consider if you invest in Bitcoins. The first one is to realize that this intermediary here, this ship, the ferry, the exchange, it is possible that sometimes these exchanges might go down. And there was one FTX that blew up. There's another one, MineGox. And when they do, they take down all the coins that had associated with them. So be careful. It's not very clean if you use an exchange because it is possible that you could that exchange can go away. Now, the alternative to doing the exchange is to say, well, what if I swim myself? I'll swim myself to the island and I'll open my own account. You could do that. And you bypass the exchange. So you can probably swim there yourself and you can find yourself a way to Google yourself and you can buy directly using the private key on a blockchain. And this way you don't need to use Coinbase and so forth. So the benefit of Coinbase is that, it makes it easy. You go online and they buy it for you. But again, if you do that, then you put some risk that this exchange is going to be okay. And Coinbase is certainly large. But again, when it comes to risk, there's some not so obvious ones. When Coinbase went to the island of Bitcoin and opened an account, and they bought coins that you wanted to get, they opened those private keys on that blockchain using their own. It's their own accounts that they opened. They're not called accounts; they're wallets out there. They opened on the blockchain, and Coinbase, in their disclosures to investors, they said that, listen, when we open these, it is possibly that legally we own these accounts with the Bitcoins since they're anonymous accounts. And if we get in trouble and creditors come after us, that it's quite possible that they could actually go from the for the coins in those wallets because technically they might belong to Coinbase. In other words, you don't actually own the Bitcoins because Coinbase is the one that legally might have the ownership. This has never been tested, but that's a disclosure that Coinbase itself has put out there for investors to consider. And you can say, okay, great, I don't want to deal with them. Let me go myself and buy the Bitcoins. If you do that, the risk is that you don't have Coinbase with a toll-free number. And at that point, Coin has that centralized ledger that we try to get away from, but that's a different story. But you can call Coinbase, and if you lost your password, you're fine. In the case of opening your own, you have a private key. And if you lose that private key, then you can never retrieve your accounts. There's no toll-free number to call. It's just you're gone. There's nobody to call if you lose your key or if you use a system that uses a password to get to that key. If you cannot get to it, you're done. And in fact, there are some systems that only allow you like 10 tries for a password before you get locked up forever. So that's one real risk. The second big risk is that on that island of Bitcoin, there is no law enforcement, none. In fact, this administration has made it clear we want this to be something very open, but then, hey, buyer beware. There is no law enforcement, nothing. And there's so many stories, and I've personally been touched by some of the clients that I met where they got scammed out of Bitcoins, and they asked me, how can I retrieve them? There's no chance. Nobody can get your money back if they're stolen. And there's so much manipulation and fraud. And particularly all of you folks have to be careful because it's a lot of fraud that happens there. But there are
Hmm.
other risks. I keep dwelling on risk because I think it's so important. One of the other big risks is that other folks came along and said, okay, this Bitcoin blockchain, that's fine, but it was the first one and it's limiting. So over time, there are other islands that popped up. And one of the primary other islands that popped up, it's called Ethereum. And Ethereum has exactly the same idea as the Bitcoin with the blockchain and the token. But the difference is that Ethereum did something clever. Ethereum basically said, well, what if we allow for some smart contracts? In other words, we still have the blockchain, but what if we attach some conditions? Something has to happen before I release the coins. Well, that's a step forward. So at this point, it is quite possible that Bitcoin might not be the last coin standing. Basically, it's going to be one of the many. And in fact, there are thousands of them right now. And who's to say which coin will survive over the long run? And at this point, again, it kind of the same idea. It's still a separate island. You still need to use these exchanges that move money between the different islands, the different blockchains that are all separate. And that to me is a risk. You're taking yourselves a risk that I might pick a coin that might not be really a survivor. A lot of these coins don't really have a purpose either. So it's like Dogecoin is a famous one when like nobody understands. It started as a joke and it's still like going on, but nobody understands what the purpose of it is. But it still trades. Again, there's one of the many islands that exist right now around Bitcoin, no longer the single one. Anyway, so I'm going to give you the last thing that I think it's important in terms of the considerations that I mentioned earlier, which is let's say that I do want to get into this and I do want to have an asset with a non-economic activity and I want to put money into it. Well, how much money should you put and how do you consider this relative to the other universe that we talked about? And I'm just going to make it specifically to stocks. So at the end of last year, Jonathan, if you look at the value of all Bitcoins in the world, the number of Bitcoins and how much was each worth it, it's quite remarkable because at the end of last year, all the Bitcoins were worth roughly around, and it's going to take me a second to kind of pull up the data, but it was worth quite a bit of money. All the Bitcoins in the world together, they are. Can you see, by the way? Can you see the data?
Yes, yeah, sure can.
So they're worth about $1.9 trillion dollars. That's quite a bit. If you look at the other currencies, Bitcoin was the largest holding because together, including Bitcoin, there are 3.3 trillion in all cryptos, and there are thousands of others. But Bitcoin is the big one; is more than half. But I want to make it interesting because if you look at this and say, wow, that's a lot of money in Bitcoin, it is. You just have to put some perspective. If you look at a single stock, Apple, all the Bitcoins are half of the value of a single stock. All the Bitcoins that exist, half the value of Apple, a single stock. If you look at the US stock market, the S&P 500, and you put some context to that, well, it's a really small portion of that. And if you really are a global investor and you think of all the opportunities around the world, then you kind of realize that, boy, this is a very tiny fraction of the stock market universe. And I'm not even considering the bond market, which is even bigger. So ultimately, this whole Bitcoin universe is roughly about, maybe less than 1 or 2% or so out of all the money that he can invest. And at that point, the question is whether the juice is worth the squeeze. If I really want to put so little in there, it's not going to make a huge difference. But you got to consider all both the potential upside and the downside. And to me, that is something that I personally look at it as that if you want to participate in it, this is my personal opinion. If you want to participate in it, I would do it the same way that you would buy a bottle of wine or a piece of art, or a bubblehead for that matter, and it could go up in value. Absolutely, be ready that it could not, it might not. But that's something that is more of your decision rather than like I need this for my financial plan.
Right.
There are a lot of little things that ultimately add up to. At this moment in time, it's not clear to me that you are so missing out if you're not putting it in this your financial plan. But if you want to own it for not necessarily financial reasons, maybe it says something about you, or maybe you just do want to hit the jackpot big in case it goes up, do it. I mean, there are a lot of other worse things that people can spend money on.
Sure. Well, and Apollo, that's I think a thoughtful way to look at it. When we think about designing portfolios at Warburton Capital, we frequently start with the global market. This is where the market is. These are each of these countries and sectors and companies and their market weighting. And if we vary from the market, there needs to be a really good reason why we vary from the market. And so that's something I've often shared with clients is if we do have investments in cryptocurrency, it's worth at least considering how much of the overall market that the cryptocurrency market represents as a percentage, and then maybe using that as a guide for how much and having a budget for it. I think with this, like anything, if it's a private deal or real estate or anything, it's always a good idea to go into it with a budget. This is how much I'd like to put in. And this is how much I'm okay with putting at risk, acknowledging that there are different types of risks.
Yep,
Apollo, we got a bunch of questions during that last
let's do
bit, so
it.
I'm going to rapid fire, okay? We're going to
Do it.
go through a few of them. The first two, I think you can answer pretty quick. Is it true that there's a certain set amount of Bitcoin and no more?
Yes. So when the system was designed, the system was created back in 2009 or so. They put a cap, they put a limit on how many Bitcoins can be issued by the system itself, which is the only way to do it. And that is 21 million coins. And it's estimated that it's going to be another 100 years or so before the last one is issued. So there are quite a few issued already, but the pace of new issues has slowed down. And some people have looked at this as being, hey, this is a benefit because this is like digital gold. There's a limit. It's not unlimited. And you can look at it that way. I actually look at it the other way. I look at it, it has two major negatives to it. Number one is if you think of gold, well, folks, gold was the precious metal that backed the dollar between the time when President McKinley came in the White House up until the 1970s, in fact, 1971. And that's when President Nixon went on TV and he told the world that as of today, the dollar is no longer linked to gold. Why? Why did that happen? The reason that it happened is because we just not dig up, we did not dig up enough gold for all the needs of the economy. We had more people in society, we had the economy growing, and we just did not dig up enough gold. And we had to cut that loose because you need to grow. You need to grow the money supply as the economy and the people grow. So to me, that is the limit of 21 million coins. It's a big drawback. But the second big drawback of 21 million, which nobody was able to figure that out, is that right now the way that a new coin is issued is as an incentive for somebody to go there and spend the money on the computers and electricity to validate these transactions, which is called mining. So to validate a transaction that this transaction is legit, that Purdy had the money and now it's going to move to the other account, somebody has to do it, and it requires some puzzle solving by computers. And the way you get paid for putting in that effort to incentivize folks to do it is issuing new Bitcoins. That's how they're issued, and that's the incentive for these miners to continue to do it. Now, when the last coin is issued, the 21st million coin is issued, nobody is able to ever say, like, what will keep the system going? Because at that point, the miners will have no incentives. Why would I want to spend money on computers and electricity if I don't get paid? And nobody's been able to figure out, well, what exactly is going to replace the miners? So yes, there is a limit, and I would not look at it as a positive, but much more of a limitation.
Great, thank you. This one came in as well. I think pretty quick one. Are there companies you're aware of that do accept Bitcoin as payment?
Um, Not mainstream companies. They might be. I think Tesla for a minute tried to accept Bitcoin, and they did it for like literally like a minute or like hours or days, whatever. It's a very, very short time because they realized that somebody paid them X amount of Bitcoins, but they cannot pay their vendors in Bitcoins, so they have to convert in dollars. So by the time they got the money from Bitcoin into dollars, it was a very different amount. A lot of time was lower, so they just like no. There could be companies, absolutely. There might be places where you can say accepting Bitcoins. I just there are not many, and they're not mainstream. And the biggest issue, folks, is that right now it's electronic money. Everybody's like Bitcoin is electronic money. Great. But we live in electronic money anyway. Like the credit cards. When was the last time that you paid, and how much do you pay with cash? Most people, I mean, there's some people who pay more in cash, but most people, they use a credit card, they make transfer from their bank accounts. Most money today is electronic. So Bitcoin is a bit of a solution in search of a problem. And in the US and the developed countries, it's not really something that it's being accepted because there is no need. We already have electronic money in a much more robust way.
Here's another question, and this goes back to the ferry mainland analogy that you made earlier.
Yep.
And I'll read it here. Isn't it likely that the ferry could be Ripple, also known as XRP, or a related stable coin? Could that replace the Swift system and some of the downfalls or negatives of the Swift system, such as the cost and the
Yep.
security?
Yep. So that's a great question. So I'm glad, yeah, because we brought in the idea of stable coins and what they are. So stable coins are basically, if you want to think about it, there are a sub island on Ethereum. Most stable coins use Ethereum as an island. So there's still an island. There's still an island that it is. So what makes this a stable coin is that when a coin is issued, there is an associated amount of dollars into a bank. So basically, these could be treasury bills, or it could be bonds, or there's typically not going to be cash, but treasury bills or something else. So when a stable coin is issued, you know that that's backed up by that. And the reason they do it is because you put in the money into that stable coin, so you deposit on the mainland, and then they issue the stable coin. But that money that you deposited, basically they can do whatever they want with it. They can make interest on that. So think about this: if you make 5%, and somebody has $100 billion in a stable coin at 5%, they're going to make $5 billion in interest that you're missing out because the stable coin is not paying any interest. So stable coins are a more specific one because it gives people the warm and fuzzy feeling. Now, as I said, this blockchain system, it is interesting, and I think it has value. And a lot of companies have adopted it, not just in finance. In Walmart uses it with their trucks and the delivery. So it's been used for a while. There are companies who have built a world around blockchains, but they don't have to have this tokenized idea. Because even if you say, well, we're not going to do Swift, you can help some payments move on the island, but eventually you have to move from the island to the mainland, because if you want to make purchases in dollars, then you have to use the mainland dollars. So in that case, think of a stable coins as a token at a casino in Vegas. You can use that token at a casino in Vegas. You can go buy anything in the casino. You can go buy yourself a T-shirt and a coffee. You can bet with it. Do whatever you're doing. But as soon as you walk across the street at a 7-Eleven, that token is still irrelevant. You still have to go and exchange it for real dollars. So in terms of replacing Swift, again, you still have to move from the island to the mainland, and the rest of the world is just still, it's going to be a long time till we fundamentally change the dynamics, because people do prefer something that is backed by the government. I acknowledge that banks are more inefficient in the way that money is flowing and all this stuff, and perhaps the fees that I pay. But I'll tell you what, I would rather have that system than the blockchain system. Why? Something goes wrong, I can call the bank and they'll fix it. Somebody defrauded me on a Visa card, I call Visa, they'll take care of it. There's nothing like that there. And if I'm asking you, what would you prefer? A Wild West where you maybe save yourself a few bucks, or a system where you have some comfort that there is some accountability, there is some protection there? And that's why, maybe it's just me, but I don't know how you feel, Jonathan. I prefer this. I'm okay paying for that convenience.
Sure, sure. And there was another question that came in. I'd like to relate to this. We're talking about the system and government backing the dollar, obviously, in the banking system through FDIC insurance. The attendee noted the U.S. creating a reserve of cryptocurrency and uh, asked your thoughts on it. What do you think about that recent executive order?
My first question would be, in which cryptocurrency? Because there are thousands of them. Even stable coins, there are tons of them. So somebody has to pick one. Why that one versus another one? That would be my first question. The second is, what is the benefit of doing that? How is that going to help all of us? Because in effect, the government is saying, I will not build a hospital in Tulsa. I will not fix the highway, but rather I'm going to put some money into some electronic asset that what am I going to do with that? What's the benefit? So somebody has to kind of define the specifics of it, which Bitcoin or which Ethereum or which Solana, where there are tons of these currency. Who's going to pick, and why did you pick that one? The second one is what's the goal? What were you trying to accomplish with this? How is it going to benefit the society as a whole? So there are a lot of unanswered questions that when I heard this idea, unless somebody gives me some specifics, I think that our tax dollars, my personal thought, are a lot better put to use by trying to do some research and help us, with a lot of medical issues that a lot of us are facing, with a lot of other things that, in other words, in my mind, that we can be investing as a country, rather than put money into something that I'm not exactly sure what the goal is. I'm not even sure what derives the value, and how you pick the winners. So no, so to me, like, again, it's a matter of like a resource allocation. We have a scarce number of tax dollars. We are already in the hole, $36 trillion dollars, and somehow we're going to take more money and put it into this. I just, to me, like I would need a lot more specifics and a lot more
Sure.
really clear answers before I say, yeah, it's a great idea.
Awesome. Thank you for walking through your thoughts on that. Another question that's come in from a few different attendees, I'm going to try to synthesize them into one question. Cert kind of talks about the more mainstream adoption that we've seen of cryptocurrency and Bitcoin recently, especially by some investment managers and fund managers. So now with Bitcoin ETFs on the market and also some tokenization of real assets, there does seem to be more institutional involvement from more traditional finance players. And do you see that as sign of progress or maybe a lasting integration into the global finance world or another chapter of a speculative cycle?
um, Without being cynical, I mean, if I were to be candid, which I will be, there are two words: money grab. Look, these are the investment options that are available to managers as well, not just you as investors. And the bulk of the money in this country has been invested in funds that either buy publicly traded stocks or bonds. And these funds, to the benefit of investors like you, have come down in fees to the point where you look at Dimensional or you look at other funds, they're like, like a fraction of the fees that we generated as a company 20 years ago. A lot of the funds have come down, and it's not just Dimensional, but the industry as a whole. When it comes to public stocks and public bonds, the manager fees has come down. So if you look on this board, options are kind of limiting because of regulation, so it's not easy to kind of buy them. So if you look at this board, and if you are now an investment manager saying, well, where else can I pick up some fees? Well, private equity. And you hear so much about private equity as being funds being offered to investors, whether they're a good idea or not, but the fees are higher for private equity. The same private credit you have fees being sold by Wall Street because the fees are higher on private credit. And now I think that Bitcoin is in that vein. Is basically they're saying people are willing to pay more for the novelty because it's not stocks and bonds. They're looking for something else. And my personal feel is that it's not, they're getting into that business because there's a lot of money to be made. I think that people are looking and saying, what else can I do beyond stocks and bonds? And the reality, the question is, do I need to go beyond that, and to what degree do I need to go there? But to me, it's not. It's basically they're capitalizing on a bit of a craze that exists in society. It's the same. I mean, if I lived in the Netherlands in the 1600s, I would have built a tulip bulb fund because you can probably charge quite a bit for trading tulips at that point. So again, I mean, I don't look at it as a. I just look as the industry is kind of grabbing onto how do I, make more money on funds than I could on publicly traded stocks and bonds. But that's not the real question. The real question, do I need this? Is this the right thing for investors?
Sure. Well, Apollo, thank you for that perspective. I do want to take a moment and take a step back and reiterate something I think is so core to investing, which is when we make an investment decision, we first have to put the goal of the investment at the forefront. What are we trying to accomplish here?
Yep.
And the longer our time horizon is, perhaps the more risk we might be willing to take. And so when we work with clients, the first step in our process is clarifying goals and then deriving a plan that helps to accomplish those goals. So to the extent that those who are watching might be considering a cryptocurrency investment or may already have cryptocurrency investments, I would encourage you to just think through what is the goal of this investment? What do I hope to accomplish? One of our advisors on staff here, Brian, says it very well. He says, if you hold cryptocurrency, a great mindset to have is an if and until mindset. If I'm holding this, I'm holding it if and until it goes up. And if I'm putting money into it, then it's money I'm okay putting at that much risk, because it is a different, we have 100 years of
Right.
data of what stocks and bonds have done over time. We have a lot less data of what cryptocurrencies, how they've performed over time and why exactly. So, great conversation today, Apollo. Really appreciate you taking the time. Always enjoy your perspective.
It's super fun. Always great fun talking to you. And thanks for the invitation. Thanks to everyone for taking the time. I hope kind of provide a little clarity rather than more confusion.
Yeah, absolutely. I think especially walking through I love the analogy of the mainland and the ferry and then the island of cryptocurrency. That helps make it real and can help to add some clarity into what this is and why there's interest. A couple quick things as we close. If you had a question you didn't have a chance to ask or want to dive into this topic more, you're more than welcome to reach out to me or anyone on our team. Our advisory team would be happy to answer your questions as a follow-up. And then also keep an eye on your inbox. Here in a little bit, we will send you a copy of a white paper that our firm is putting out on cryptocurrency. It dives a bit more into this, the history of crypto, how we got where we are, and things that investors should consider as they're thinking about adding it to their portfolio or not. With that, thank you so much for taking the time out of your day to join us, and we look forward to hosting another webinar again soon. Thank you.